19 years. That is how far back you have to walk to find long money priced where it was priced yesterday afternoon. This is Thursday, July 30th, 2026. 12 people met in Washington and voted to change nothing, and the bond market repriced anyway. Start with the anchor. As of just past 5 o'clock Eastern, Bitcoin trades at 64,200, flat on the day, holding the same shelf it has defended all week. Now our board, and I have to give you this one straight, because you pay for the honest read and not the applause. Every morning this week, I have named the anchor still standing. This morning, there is none. At 2 minutes past 4 Wednesday afternoon, the long bond rolled its optimized trend bearish on our read of the InvestAnswers Decision Support System. The last green flag on our macro layer, gone at the closing bell. Bitcoin rolled red in that same minute, 4 o'clock sharp. Coinbase 1 minute behind it, and the cascade had started before the Fed even spoke. At 1:30, 30 minutes ahead of the decision, Synopsys, Freeport, and Constellation Energy all turned red inside the same minute. 0 bullish anchors. Our engine calls the regime a risk-off and points it down, and for the first time in weeks, it has nothing out front to argue with. Bitcoin did try green again at midnight and gave it back by 4 this morning. Do not build a thesis on a 4-hour flip. The decisive move yesterday was not in crypto. It was in the 30-year. Into the open, Tesla last closed at 298. Here is what actually happened at 2 o'clock. The committee held at 3.5 to 3.75% for a 5th straight meeting, but the vote was 9 to 3. And all 3 dissenters wanted a hike. Cleveland, Minneapolis, and Dallas, 3 regional Fed presidents, breaking the same direction together. You have to walk back to September of 2016 to find that. Then, Chairman Walsh took the microphone in only his 2nd meeting running the committee, and he did 2 things. He stripped forward guidance out of the statement entirely. No dots, no projections, no signal. And then he said this: there is no soft inflation target. There is only a target, and it is 2%. 5+ years of inflation above target, he said, cannot be cured in 9 weeks. The market did not hear resolve. It heard a man who intends to do nothing quickly. The Dow fell 1,153 points, better than 2%, to 51,594. Its worst single session since April of 2025, the broad market of 1.5, and the real tell sat at the long end. The 30-year yield jumped better than 10 basis points to 5.2%, touching 5.24 intraday, the highest since July of 2007. Read that slowly. A hawkish central bank is supposed to crush long yields, not launch them. When the chairman talks like iron and the 30-year sells off anyway, the bond market is not pricing inflation being beaten. It is pricing inflation being tolerated. Crude agreed, ripping better than 4% toward $83 as Iran-backed forces struck Saudi facilities in the eastern province for a 2nd straight day. Civilized men are more discourteous than savages because they know they can be impolite without having their skulls split. 5 years above target, guidance withdrawn, 3 of their own voters overruled, and not one mechanism on this earth by which you or I can make that committee answer for any of it. That is not a conspiracy. That is the design. Now set the coin beside it. On a day when the price of long money printed a 19-year high, the Dow shed 1,100 points, and crude ran 4%. Bitcoin moved 0.4%. It did not rally. That is not the point. It did not care. Then the bell rang, and the 2nd story landed after hours, and it may outlive the Fed. Microsoft and Meta reported within minutes of each other. Microsoft beat everything. Revenue up 18% to $90 billion against $87.5 expected. Its cloud business growing 43% against roughly 40. And the line the market actually bought was the boring one. Microsoft held its capital spending envelope for this year flat and guided next year to stay free cash flow positive. Shares jumped as much as 8% after the bell. Meta did the opposite. Revenue up 28% to $60.8 billion, and net income down 14% to $15.9 billion. Operating margin compressed to 31% from 43%. 12 points of margin gone. And management raised the floor of this year's capital spending to $130 billion. The stock, already down better than 6% on the week, sold off further after hours. Sit with that verdict, because it inverts everything the last 2 years taught this market. Announcing bigger AI spending used to be the bullish event. Last night, the company that promised to spend more got punished, and the company that promised to spend the same got paid 8%. The market has stopped grading ambition and started grading arithmetic. That is the abundance trade meeting its bill. Building abundance is not free. It costs 12 points of operating margin, and it lands on the income statement, whether the models earn their keep or not. This is exactly the ground Jordi Visser marked out last week when he said, "The easy money in artificial intelligence is finished," and that, from here, the returns belong to whoever's economics survive contact with the capex. One voice stood on the other side of that trade with real money. Into Tuesday's shipwreck, Cathie Wood's ARK bought NVIDIA across all 5 of its largest funds, calling it a bargain at 22 times this year's earnings and 15 times next year's. Wednesday, it added another $14.5 million of SpaceX and $20 million of Taiwan Semiconductor. NVIDIA itself fell better than 3% Wednesday. Somebody here is wrong, and the filings tell you who is willing to be. And now the counterweight, which is the best thing I read all week. On Tuesday, Michael Saylor published a 9-part argument that Bitcoin's consensus rules are a constitution. His claim, any change to the base layer made without near unanimous agreement is an attack on the economic rights of every participant, the ones alive now and the ones not yet born. Bitcoin has won, he said. Now it must survive victory. He is aiming at a live fight. There is a proposal on the table numbered 110 that would cap non-financial data on the base layer for a year, a swing at the inscriptions, and junk riding in the chain saddlebags. Its signaling window opens on a block due on or about August 9th, and it needs 55% of the hash rate to activate. Note that bar. 55, when this network has traditionally demanded 95. Miner support this morning sits under 3%. Hold both of yesterday's stories in one hand now. On Wednesday, 3 officials dissented, lost, and the policy passed straight over their objection, because that is how the institution is built. On or about August 9th, a proposal with an already lowered bar and under 3% support will simply die, because no one alive has the authority to impose it. Not the largest holder, not the largest miner, not the loudest developer. One system changes when the chair says so. The other changes only when almost everyone agrees, and almost everyone never does. That is the product, Warband, not the price, the rules. So here is your ground. The last bullish anchor broke at the closing bell. The regime is risk-off and pointing down, and long money costs what it has not cost since 2007. Do not confuse a red trend with a broken thesis. A trend measures the crowd, and the crowd just met a chairman who refuses to tell it what comes next. Watch the 30-year, not the funds rate. Watch what companies spend, not what they promise. And remember which of these 2 systems needed permission yesterday, and which one needed only arithmetic. This is Warband as a service. Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Until the next dawn, sharpen the axes. Skål!